stop rates retraced downwards on the primary market T-bills that the central bank sold this week as the Debt Management Office also wrapped up its savings bond auction for the year. In the meantime, big counters in banks, telcos, industrial and consumer goods seem to be in the crosshairs of investors as the new month gets underway. Joining us now to squawk on the trading week on Broad Street is the CEO of Cowrie Asset Management, Mr. Johnson Chukwu. Good evening, sir. Always a pleasure to be with you. He's also a licensed dealer and broker. Thank you so much for joining us, sir. So, as we get into today, what are the key drivers of investor sentiments in equities in the countdown to Christmas and the year end?
Thank you, Rotis, for having me. I think basic thing that is happening is that people are now taking position ahead of the year end. As I said in one of your programs the other day, that as we approach the year end, people will be looking at instruments that have good prospect of dividend payment, and they want to take position ahead of the closure of their financial year. And what we have seen is that we've seen counters that have reported third quarter results that are quite rosy, and the investors are taking position in them.
And we can see the Christmas spirit in their background. You've got the lights up already. Strong bargain hunting on the NGX in recent weeks seems to be on the big counters like Airtel, MTN, and big banking names as well, industrial goods. What was driving that?
Well, you have to segment that into the individual. You have to break that into the individual segment. If you take, for instance, the Airtel of this world, of course, we know that the telco companies have been reporting good performance. Airtel is one of those companies that have reported good performance in the third quarter of this year. I mean, since the beginning of this year. The same thing applies to the financial system, the banks. The fact that we've seen sharp increase in interest rates without a commensurate increase in deposit rate would mean that the banks are enjoying a wider net interest margin, and that will reflect in their bottom line at the end of the year. So that also applies to some large corporates that have reported good performance so far. So in as much as we've seen market rallies across different sectors, but investors are quite discerning. They are focusing on those counters, those companies that have shown good performance in the current year and still have both good prospects in the remaining part of the year.
Some big news this week is that Afrexim Bank is looking to get an unspecified equity interest in Geregu Power PLC. How important is this deal if it goes through for the power company, the market, and the energy sector?
You know, Rotus, the interesting thing about this interest of Afrexim in Geregu is that it further validates that the Nigerian electricity industry is coming out of the woods. Geregu was the first to get listed. It's still the only listed company among the Gencos. But the fact that we're now seeing even a multinational investment firm or a bank like Afrexim wanting to take position in Geregu, indicate two things. Some of the challenges we've had is that that sector has not been able to achieve commercial viability or economic viability. With this investment, it simply means that investors are seeing a future of the power sector that looks more attractive than what it was in the previous years. And the Geregu as now the poster child of that industry. Attracting investment from Afrexim, for me, it really defines the perception of our Nigerian electricity industry as an industry previously considered as a dead end for investors, and now an industry with good prospects for investors.
Just to follow up, do you think that can encourage other players to get listed from the power sector on the exchange?
Yes, absolutely. I mean, Geregu has tested the waters. He has been the guinea pig, and it navigated it quite well. So what we should expect is that other generation companies will come into the market, and then because I'm not sure that the market is willing to put investment there. And once we begin to see capital flow into the power sector, we will see improvement in investment. We will see stabilization of power supply. We will see a commercially viable energy sector that will be self-funded. I mean, when I say self-funded, it can attract capital investment from investors, and it can also generate good profits.
All right. Primary market auction, I want to talk to you about that. Stop rates on the primary market auction lower on Wednesday across all the tenors. Why was that, do you think?
Come again.
The CBN's primary market auction for bills, as far as them being lower on the tenors, can you speak to, I guess, the movements on those tenors for the primary market auction?
Well, I think what central bank did was basically take advantage of the liquidity situation when the offer came up last week. On Wednesday. If you consider that the 364-day bills closed at 13.05%, down from a 14.84% it closed the last auction. What happened was there was improved banking industry liquidity. I think that industry liquidity as at that day, the offer was about 207 billion naira, and that obviously was what informed the central bank to come to offer the instrument at a lower rate. But beyond that, of course, we know that interest rate environment is still choppy. We know that inflation rate is still on the northward movement. So you can say that this lower marginal rate on the T-bills, 364-day bills and 182-day bills, which came at a rate of 8%, were driven by lower inflationary pressure or lower inflationary outlook. But it was largely driven by the opportunistic advantage that excess liquidity was available. And again, I must not fail to mention that toward the year end, many corporate organizations buy T-bills to hold as part of their liquid asset, particularly those institutions that are regulated and they are required to hold some level of liquidity for year-end. The insurance industry is one of those sectors. The insurance industry operators need to hold some level of liquidity for year-end, and I know traditionally towards the year-end they buy treasury bills, which will at least give them some yield, return, while it's also qualified for as liquid instrument.
The debt management office, you mentioned 8% on one particular T-bill there, one of the tenors. DMO, last savings bond of the year. Do you think the yield on those papers are still attractive? I think about 12-13% for an average investor.
Interestingly, the segment of the side that I invest in FGN savings bond, we still consider that attractive, in as much as it's still below, it's materially below the inflation rate. But the options they have are the plain vanilla savings that you have in the banks. So for those who have longer tenor savings deposit that they are not willing to, they may not need in immediate, a return of 12.25% on the 2-year paper and the 13.25% on the 3-year paper will still look attractive to them. So this is a particular segment of depositors who are low-ticket depositors. They don't have bargaining powers. They are not market makers, and they are just looking for instruments that will give them returns better than what they get from the banks, and also better than what they get from their savings accounts.
Always a pleasure having you, sir. Mr. Johnson Chukwu, licensed dealer and CEO at Cowrie Asset Management. Thank you so much for your time.